Okay. All right. So thank you guys for joining me for today's lesson. Today I'll be talking about the Strat. That's what they call it. It's called the Strat. It was developed by a trader called Rob Smith. He was actually a phenomenal trader, or used to be. And I didn't learn it from directly from him. I actually learned it from a couple of his students. The first one was Sarah Strat Sniper, who is an amazing trader. You can watch a lot of her videos on YouTube where she explains the strategy in terms of how to use it for like trading stocks specifically. And I also learned it from this guy named Alex Options on YouTube as well. I think he's a really phenomenal good trader as well. He has his own Discord. He runs his own like YouTube channel. He has like this video on his channel where he talks about the strat for like 2-3 hours, going into like all the specific details. So I do like implore you guys after watching this video to go check that out as well, because that's really mainly how I learned how to use the strat. Right, today I'm pretty much just gonna go over with you guys the absolute basics of the strat, like the ones and twos and how to use it, some of the common patterns to watch out for using the strategy, and pretty much my rendition of how I use the strat in my trading. I'm gonna go over some examples at the end of the lesson on pretty much how in this week's trading on some of the trades that I caught using the strat on gold as well as on the NASDAQ. So we'll dive into it. I also want to, before I start in, I also want to say that guys, with the strat, it's just a strategy to read price action. I can't guarantee that, once you guys adopt the strat, you'll suddenly start making more profitable trades, or you'll be a profitable trader in the long run, right? With anything, there is that risk reward, and there's so many other things that you should consider before entering into a trade. So this is just one common strategy. If you like it, make sure you guys back test it, make sure you guys practice with it before actually applying it into your own trade with any real money, right? So it's just a strategy out here. No guarantee that it will make you a profitable trader, but I will say from my trading experience, the strat was really helpful in helping me actually analyze price action. Like when I first started trading, before learning the strat, just learning simply about candlesticks, everything just seemed completely random to me, right? There was no sense of direction. It was just each candlestick meant open, high, low, close, and that was it, right? But with the strat, I kind of got this better understanding that, okay, there's more supply demand factors going into it, and it kind of gives you actionable setups that you can then play into, right? So it's really nice in that kind of sense that it removes any sort of external bias or emotion, and it gives you kind of objective truths that you can then watch out for and then play accordingly, right? So that's what we'll talk about today. Just do a quick rendition. I hope not to take too much of your time. Today's session is gonna be pretty quickly go over what the strat's about, and then we'll do some examples as well, right? So the first question, again, what is the strat? So the strat, simply put, is a price action based trading strategy that is completely objective, meaning that entries rely completely on preset rules and eliminates any guesswork, right? So you'll see there's several different rules that are encompassed with the strat. That's what makes it so effective. And one thing I want to kind of dive into this definition is that it's a price action based strategy, right? And that's really cool because if you think about trading, right, when you go to the presets of like when you start to kind of get more into trading and once you get more experience with the game, you'll learn that nothing beats price action, right? So because price action is kind of happening in real time, right? There's no delay, right? When a sale gets made, when a purchase and buyer meet, that transaction happens, you see that take place on the chart in almost instantly, right? Given some delays in data, but it's almost instant action. So if you can have the ability to read, what price action is doing, what the candlesticks are actually telling you, like in a series of different patterns or forms, then you can get a better understanding. You can be able to react quicker, right? And in the hierarchy of order of things for kind of day traders, it goes price action is first. It's key. Like we'll kind of hear the saying, price action is king. The second thing is like your technical levels, like your demand zones, supply zones are important. Your support resistance levels are important. The third is the overall market structure, right? And the volatility, momentum, stuff like that. And then the fourth is indicators, right? And the reason why it flows in that, like I mentioned earlier, is because price action is almost instantaneous. You can react to it almost right away, while the other data just relies on past information, right? When you're identifying areas of support and resistance, you're looking at historic price action to identify those areas. And when you're relying on indicators and stuff like that as well, a lot of those indicators, the formulas that are being used based off past price action, right? So it is a bit delayed. So that's why price action is very important, especially day trading. It helps you react quicker and make more informed decisions. And another part of this definition I really like is that it is completely objective, right? You're looking for certain things to take place on the chart rather than putting on your own bias, right? So rather than you putting your emphasis on what the chart is doing, the chart is telling you what to do, right? So that's how it's objective in approach. As I mentioned earlier, this is developed by Rob Smith. It's not my strategy. This is not something that I came up with. This strategy has been in place for I think over like 5-6 years now. I think he started this back in like even before that, maybe like the 2000s or something like that. But it is definitely an old strategy in place. When I first started trading, I used to use the strat a lot in my concepts, but then as we went on, employed different strategies, I was still kind of in the back of my mind using the strat in a way because I would identify the candlesticks, but I wouldn't put the numbers on the chart. And now, kind of in the past like 2 weeks, I got reintroduced to the strat combos, and now I've also been applying to my strategy, and I find that it works really well, especially with our demand zone, supply zones that we use every day. So we'll talk a bit more about that. We'll do some examples as well. And again, this strat, it just helps remove any biases, right? And it can be used on any time frame for any sort of trading. It can be used for day trading futures, if you're trading options. It can be used for your swing trading stocks and stuff like that as well, depending on the time frames that you use and the charts that you look for. All right. So that being said, that's the strat. So let's dive into what exactly the strat is, right? So first thing to talk about the strat is that it completely rides on candlesticks, right? So I'm guessing that everyone here knows what a candlestick is, knows what the candlestick represents. It represents the time frame, determines the open, high, low, close of that time frame, gives you a lot of information in itself. So the strat relies on these candlesticks, and it has what's called the universal truth, right? The universal truth, the rule of three, whatever you want to call it, but it pretty much identifies that each candlestick can only print in one of three types of ways in regarding to its previous candlestick, right? So that's very important. So each candlestick can only print in one of three different types of ways. The first type of way that a candlestick can come out is what's called the inside bar. The inside bar shows a period of consolidation where the candle does not develop a new high or new low. So if you look at the example here on the right, pretty much so you have this previous candle, which is kind of pushing to the downwards direction. And then on this candle, in regards to the previous candle, did not break its high and it did not break its low, right? It formed inside of that previous candle. So this would be labeled as a 1, and it'll be called an inside candle, right? An inside candle, again, shows an area of consolidation. It shows an area of tightening where inside that period of time, buyers nor sellers had control of price action, right? It was kind of just sideways print, right? So that's the first type of candlestick that can form. It's labeled by 1, and it's called the inside bar. The second type of candlestick that could form is called the directional bar. The directional bar is a candle that took out the previous candle high or low, indicating a strong move in that direction, right? So for example, if we look at the right here again, so we had this previous candlestick pushing down, right? Pushing down, forming a red candle. And then we had this 2 candle here breaking the low of the previous candle and pushing lower. So as it broke the low, this is what we would call a 2 down, right? Because it broke the low of the previous candle, indicating a strong move in the downwards direction, right? Then we got that inside candle forming, and then we got this candle here, which broke the high of the previous candle, forming what's called a 2 up, right? So a 2 up broke the high of the previous candle, indicating a strong move in the upwards direction. All right, so pretty clear there already. So again, we got a 2 down, we got a 2 up, again, just breaking the low, breaking the high of the previous candlesticks. Then the last type of candlestick that we got is called the outside bar. The outside bar shows a period of expansion where the candle takes out the previous candle's high and the previous candle's low, right? So for example, here on the right, this would be an example of an outside bar where we have this inside candle forming, and then on this candle, it breaks the high and then it breaks the low, forming an outside expansion, right? With the 3 candles, so for example, with the 3 examples, a 3 candle can only be formed after a 2 candle forms, right? Because just think about it logically, we can't have a simultaneously break the previous candle's high and the low. So a lot of times you'll see like the candle come up, it'll break this candle's high, it'll be looking like a 2 bar, forming a directional move to the upside, but then maybe like there's some news-based happens, or there's not enough strength from buyers, and it starts to reverse, and then it ends up closing on the lows of the previous candle, forming a outside bar candlestick. So a 3 will always be a 2 before it's a 3, and not vice versa. And again, just shows area of expansion. The way I like to think of 3 candlesticks is like failed breakouts or failed reversals, right? Where it attempts to make a directional move in one direction, but then it fails to do so and it reverses in the opposite direction, right? So again, this is 3 universal truths. This is the only way that one candlestick can form against the previous candle. Either it forms inside that previous candle, it gives a directional move either on a 2 up or a 2 down, or it forms an outside candle showing broadening, showing expansion in price action. All right, so is that clear? Again, this is pretty much the core concept of using strats, right? And then I'll also help introduce you guys to an indicator that I use called the Strat Assistant, which can identify the candlesticks. It labels it on the chart, whether it's a 3, 2, or a 1. Kind of makes it easier for you guys to identify the candlesticks as well, right? So that being said, with these three universal truths, then we can look to identify when these candlesticks come in combination to either give us what's called reversals or continuation patterns, right? So the first thing we'll talk about is reversals. So with reversals, pretty much, I'm pretty sure everyone here knows what a reversal is. It's pretty much when price is moving in one direction and then it reverses in the opposite direction, right? Rather, prices are moving strongly in the upwards direction, it hits a resistance and then it starts to reverse, starts to move down. Or if the price action starts to move down, it hits a support and then it starts to move up, right? So we're looking for possible reversal entries to kind of catch that change in direction. So with the Strat combo, because of the three universal truths, the amount of reversals that could take place in price action is very limited, right? There's not a unlimited amount of reversals that could take place or biases that could be placed on the chart. It's very limited to very few core concepts, and then these concepts or these patterns is what you can watch for to then catch actionable setups, right? So the first type of reversal using the Strat combos is what's called the inside bar reversal. And on the inside bar reversal, you're typically looking for a one candle, right? So if you look at this example here, pretty much you get price action, right? You're getting a strong move in the upwards direction. Let's say then it comes into a supply zone and then you get hit a snag. And now at that point, buyers and sellers are fighting for control, right? Because there was a strong buying reaction coming in prior. Once we hit supply, well, this could be then an area where buyers are getting exhaustion, where there's no longer strength of pushing price higher, and you're starting to possibly see sellers start to come in, due to that exhaustion, looking to either close out their position or maybe add on to shorts because they think price might be a little bit too high. So when price is kind of fighting for that indecision, say at a supply zone or at a major resistance, it forms what's called the inside one candle, right? And kind of if the one candle has to form inside of the two candle here, right, giving it its name, and then on the next candle you see sellers start to get a bit more aggressive. They break the low of that candle, indicating a strong move to the downwards direction, right? So according to the Strat combos, it also identifies areas of entry and the targets that you can look for. So on an inside bar reversal, you'll pretty much take the wick or the lower wick of the one candle, looking for that short trade, targeting the low of that previous two candle, right? But typically, I don't follow these targets. As you guys know, I have my own, supply zones, demand zones, key levels that I watch for, and I pretty much look at for trades level to level. I will follow the entry. So in this case, I will follow the kind of lower one break as my entry signal. I'll put my stop loss just above that one because that's where the trade will then invalidate. And then I'll couch the move into the next key support or key level I'm watching for on the lower end, right? There could also be examples of where you get a three candle, right, where it's forming an outside bar. Then you get a one inside that three candle, and then you're looking for a reversal on the break of that candle low to the downside, right? So this will be kind of a bearish reversal, and then this opposite is a bullish reversal, right? You get a two down, it hits like a demand zone or hits a support area. There's some confusion now as sellers are getting exhausted. Buyers are stepping in because they think price is cheap. It forms some indecision, and then when you get the break of the high of that one candle, that could be your entry for longs, targeting the previous candle wick or next key area that you're watching for on the top side. And then on the opposite end, you got a three, which is a kind of forming again a three outside bar. You got a indecisive candle forming within that candle, and then you get a break reversal to the upside, right? So this will be called an inside bar reversal. Pretty much you're just scanning for ones, right? So you're looking for a one inside candle, and then you're taking the break on the reversal. Again, if it's coming into supply zone to the downside, or if it's coming into demand zone for the upside, right? So that's example of inside bar reversal. The second type of reversal is what's called a 2-2 reversal, right? So a 2-2 reversal is a two candlestick pattern where you're simply looking for a reversal on a failed breakdown to the down, failed breakdown or failed breakout, right? So for example, here you have say prices trending in the downwards direction. You got a bunch of two downs that are forcing price to move lower, and then it comes into an area of demand, and you're seeing that price trying to push in, broke the low of the previous candle, but sellers were unable to hold, right? Sellers got exhausted, they got weak, buyers started to step in, and then they closed inside of that previous candle. So this is sometimes what's called a failed two, because it failed to give us that continued directional move, and it ended up reversing in the opposite direction, right? So if that's the case where you get, a failed two forming, then you're looking for entry on that previous candle's high for a pushback up to the target of that previous two candle, right? And then this is on a bearish reversal where you're getting a two directional move to the upside. Buyers are looking strong, but then they reach a moment of exhaustion. Sellers start to step in. They close inside that previous two candle, and then you get your entry on the break of that candle's low for that break to the downside. I will say sometimes with these two reversals, the break does happen pretty quickly, so you got to be on your toes. Like as soon as like this two candle closes, get your shorts ready, and as soon as you break that low, that could be a strong entry for those shorts, right? And then your stop loss in this case would be the high of that two candle, because then that's where the trade will invalidate, right? So very simple concepts, right? Nothing too hard about that. Identifying what candle you're looking for. Is it a one? Is it a two? And then identifying where it's happening in price, and then look for that reversal or that bounce, right? So very simple strategy. Yeah, Deepak, exactly. So one core concept that we'll talk about later as well is that you need to look at these strat combos at a point of interest. So yeah, looking from supply zones, demand zones, or looking at like key areas like the London high, London low, overnight levels, whatever have you. Some people like to use like previous day highs, previous day lows. It has to be at a key point of interest. It can't just be at a random part, because a lot of core strategies, you want to see, strong buyers or strong sellers step in, right? For us to catch a nice reversal, we need to be at an area where we're thinking that, supply and sellers are going to come in to push down aggressively, right? Or we're looking for a nice bounce. We need to look for an area where there's going to be strong buyers that can then start to push price to the upside. So the strat combo doesn't necessarily have to be near a key level, but it works best near these key points, right? So typically you want to look for these types of patterns to happen near supply or demand zones, right? The other type of reversals that take place, right? So not that many, these are like the final two, is what's called a 3-2-2 reversal. In a 3-2-2 reversal, you have a 3 candle showing broadening, showing expansion in price action. It then flips to the downside, shows strong continuation on this 2, but sellers are unable to hold, and they end up closing inside that 3 candle, signaling signs of a possible reversal. You'll catch the entry on the high of that 2, looking to target the high of that previous 3. These are some of my favorite reversal patterns to catch, just because it shows expansion, and typically you catch really nice moves for a low risk to reward, right? Your stop will be kind of just underneath the 2 candle, targeting the high of the 3, which can show sometimes some pretty big moves to the upside, right? And then on the opposite end, a bearish reversal, you got a broadening 3 forming a green candle here. Buyers are trying to continue to push up, but it hits a moment of resistance. Buyers reach exhaustion. Sellers push it back inside of that previous candle, and then you can take your entry on the low of that candle on the break to the downside, looking to target the low of the previous 3, right? So pretty simple strategy there. Sometimes you can also see what's just called a 3-2. So ignore like this previous candle, but looking for a 3 and then a 2 reversal could also give you a strong signal of a possible reversal as well. All right. So that is a 3-2-2 reversal. And the last one is called a Rev Strat 1-2-2 or a 1-3, right? So a 1-2-2 or 1-3 pretty much shows an area. What I like to call this also is a failed breakdown, failed breakout, right? So you have a 1 candle forming, an inside candle showing indecision. Sellers start to step in looking for that break lower, but it becomes a failed breakdown. Buyers show strength, pushing us back into that 1 candle, and then you're looking for a break off that 2 candle high for then a expansion push to the upside. And then for a bearish, like this is a failed breakout where you have, inside candle, you have consolidation forming, you have an attempt to break out to new highs. Buyers are looking weak, sellers step in, and then we start to see exhaustion to the downside. We start to see sellers get aggressive. You can look to enter on the low of that break of the 2, right? And then looking at the longer time frames, you can get sometimes a 1 and 3. And basically what this shows is you'll enter on the 3 here. So say you get like 1 candle, you get like consolidation, price action in a tight range. It ends up breaking the lows of that range, attempts to push down, but sellers aren't strong enough and it reverses. You can enter on that low of that 1 candle, looking for expansion move to the upside, right? And then a bearish reversal, same thing, consolidation, tightening action. Buyers come in strong, try to break the high of that consolidation range, unable to do so, and then that leads to strong selling pressure to the downside, right? So again, these are some core reversals that take place. And again, because we're following the universal truth, these are only limited ways that true reversal can actually occur on the chart. So if you're watching for these patterns at key levels and you're combining that with some of the other stuff we use to trade like conviction, then it's a pretty good strategy that you can use in combination, right? A lot of trades that you guys saw this week in the live session have been solely based on entering off this price action model and then just using like my demand zones, supply zones, along with the internals to assess the strength in the moves that could take place, right? So that is pretty much reversals there, guys. The next type of trade you guys can take is what's called continuations. And continuations is simple, right? You're just looking for price to continuation in that direction. You see that on the longer time frame, so the hourly buyers are looking strong still. So you're looking for continuation on the upside, or sellers are looking strong, so you're looking for continuation to the downside. So the only really valid entry on continuation patterns using the strat would be what's called a 2-1-2. And in this example, you're kind of looking for, a strong directional move to the upside. So a strong 2 candle. Then you get some indecision forming here of forming a 1. And then you get a break off that 1's high to then show continuation in that direction to the upside. So a strong continuation all coming off of the 1 inside consolidation. And then looking for a bearish continuation, you get a 2 strong directional move to the downside, a 1 forming inside that 2, and then you break that candle's low, could give you strong indication in that downwards direction, just pretty much continuing the move. You also sometimes get what's called a 222, where it's just continuously moving in the downward direction. So the candles continuously break the previous candle's lows, showing strong indication in that direction. 222s are mainly used to show that how long you can hold into a trade, right? So pretty much when you catch an entry, if you're looking at, strong continuation, you're going to see strong move in that direction. You can look at the longer time frames like the 15-minute or the 30-minute. And if you're getting consistent twos to the downside or to the upside, then that can show you to stay in that trade. Typically, these 222s aren't really good entry signals to use, not really used for entries. They're not really actionable signals, but rather to confirm that your current trade still has strength. All right. So again, very simple rules right there, right? So it's not too complicated. Just understand what a 1 candle represents, a 2, a 3, and then just looking for those patterns, identifying them as a key point of interest, and that can lead you to catch some nice favorable trades, right? So some other concepts with the strat combos, we touched on this already, but pretty much when you're looking for strat combos, you want to make sure that they occur at key levels. So you want to look at demand zones or supply zones. We will do a class in the future. If you guys are part of the membership in our Discord, we will be doing a class on November 18th on pretty much how I determine my demand or supply zones. And we'll be talking a little bit more about strat combos as well. Again, I mentioned at the start of this presentation, there's a lot more that goes into a strat combo. So I will dive more into that in the future lesson. But in today's lesson, I just wanted to do a kind of a basics like 101 because we've been talking about a lot about it during our live session. So I just want to give you guys a rundown of exactly what I'm saying. When I say a 2 up or an inside candle or a broadening candle, I want to give you guys exactly know like what exactly I'm talking about, right? So we'll talk more about that. And then again, you want to use these at key point of interest. Not only demand zones, supply zones, again, you can also use it at key timing points. Like if you're looking at, previous day high, previous day low, London high, London low, overnight levels, opening range, right? Whatever have you, but it has to be at a key point of interest where you think either buyers or sellers are going to step in, right? Another thing with the strat combo is also you want to look at multiple time frames, right? If you get multiple time frame confirmations that you're getting a trade in that one direction, like for example, say you see a reversal on the 50-minute and the 30-minute, then that is a stronger indication that the trade will move up, work in your favor, right? In the strat combo strategy, they call it time frame continuity, right? So you're looking for price action to occur not only on like the 50-minute, but also on the 30-minute and the hourly, giving you strong conviction in your trade, right? And then for day trading, the strat works better on long time frames. Rob Smith himself said that strat is best used on time frames like the 50-minute, the 30-minute, and the hourly. So those are the main time frames that I have the strats available on. Sometimes I'll use it on the 5, and then I'll look at what price action is doing, but my entries will be based off the 1 minute or off the 3 minute, right? So again, you can use it on the 1 hour, 30-minute, 50-minute, sometimes the 5, and then entries based off the 1 and the 3. Okay. So that being said, guys, that's pretty simple. That's pretty much the strat, right? It's not a complicated strategy. It's very simple to understand. There isn't really too much that goes into it, right? It's not like ICT where you have to learn all these different terminologies and all this, different types of models that are played. It's pretty much understanding what the candlesticks are and identifying some key recognizable patterns, right? So that being said, let's go over some quick examples here of some past trades that I caught using the strat in this past week's session, right? So we'll go over the trades here. So the first trade here, this was from the gold futures. This was during the Asia market session. Again, we were getting a lot of nice volatility in gold prior, not recently though, but a lot of good trades that we're setting up here on GC, right? So the first one is this 212 continuation down. So on this pattern, what I was watching for, as you can see here on the 15-minute, we were getting this inside candle here consolidation, and then we broke the lows of that candle, signaling strong move into that strength. But the entry was based off this 212 here, where we got a strong directional move to the downside. You can't see it here, but there's like a large wick here as well. So this was a large 2 candle. We got an inside 1 forming here on this candlestick. So I was looking for the break of this low. That was my entry. My stop loss was above on this consolidation. And this was a nice move down. And then again, just using time frame continuity, because I saw this 1 forming on the 15 and that we were looking pretty bearish on momentum. So I was expecting price to come down to break this low, giving us continued strength of this trade to the downside. So my entry based off the 5 here, but watching the 15 as well for that continuity, to give us that continued push down to then our next key level, which was around that 39.82. So that was an example of a 212 catching that short to the downside. There was then a rev reversal to the upside, and this was coming off of this candlestick here where we got an inside one. We got a broadening 3 candle forming, and then once we broke this high, that was my entry to go long. Took that trade. My stop loss was underneath this 3 candle here, so it was a bit wide of a stop, but then catching a really nice explosive move to the upside. And at the same time, while this was forming here, we were getting this inside 1 candle, right? And then when we saw this explosive move to the upside on good bullish momentum here coming in, well, then once we broke, I was expecting price to then take out these highs, giving us continuation of the move, leading to a strong move right up into that key resistance, right? So again, just using time frame continuity here, again, identifying that, okay, we got a strong reversal indication here. There's possibility of a reversal continuing here if we break this high. So just adding confidence to the trade, giving us a nice lengthy move to the upside here. Another example here, this was during the New York session in the afternoon. Forgot what day was it. I think it was November 3rd or November 4th here, catching a pretty nice reversal on these trades as well. So this was a strong reversal indication. I'm not sure why the chart is cut off here, but you can see here as well where we got a 3-2 to the downside, and we're kind of confirming here on the shorter time frames on the 15-minute, also got a 3 expansion 2 to the break to the downside as well. So we got a 1 candle forming, broadening 3 coming right from a supply zone, so expecting sellers to be strong here, giving us continuation. And as soon as we broke the lows of this 3, that was my entry, and then I put my stop loss right at the high of this candle, and then we got a nice move to the downside. Really, I could have probably held this for a bit longer as momentum was still strong, but pretty decent gains there, 50 points, not too bad. Gonna close that out. And this is another example of a 2-2 reversal here where we had a 2 directional candle to the upside. I will also say with strat combos, previous price action doesn't matter. So if you're looking at like all this consolidation, that doesn't really play a factor. Pretty much you're looking at just the one previous candle and the current candle that's forming, right? So in this example, we had a strong 2 up. Oh, whoops. We had a strong 2 up, attempting to break the London high. Buyers failed. Sellers came in aggressively inside that candle, breaking the lows, and then this was my entry here on this short, taking it, riding it to the downside, right? So a 2-2 reversal there playing out on the NASDAQ. This is another example of a 2-2 reversal here on the multiple time frames, right? So here you can see that we got another 2 kind of reversal indication here, right? Where we got price attempting to break to the upside, unable to do so, and then breaking lower. And then we got strong continuation here on this next candle to the downside. That's where I took my short. Could have possibly taken it here as well on this low. And then that gave us a nice break to the downside. Also signaling good continuation as well, as we got a 3, then a 1 inside candle. And then we got, a 3-2-2, So we got a 3, a 2 breaking to the upside, unable to continue here. So, and then closing on the inside of that 3 candle, looking for that low, gave us good confirmation that the strength could continue to the downside. And then on this one as well, giving us strong continuation, looking at the hourly, that the move is still looking strong here. So good time frame continuity here as we took our entry based off the 15, but it was showing strong continuation on the 30-minute and on the hourly for that downside momentum to push, right? Just giving us good reversal, and again, momentum was looking pretty bearish across the board as well, right? So I also want to say, so this, again, the indicator that I use to develop these twos and the directions is called Strat Assistant. You could find it on, you can find it on TradingView. Just search up Strat Assistant. It's like the first one that pops up. It's a really commonly used strategy, and it really helps with identifying these candlesticks. So what I'll say here with this though is, it prints a green candle. So for example, this one, because it's a 2 up, because it broke the previous candle high, it printed green, but then the outline border is red, showing that it's a red candle because it closed below the open and it closed inside this previous candles range. So the coloring is a bit off. You'll see that the 3 candles are printed purple, inside candles are printed yellow, just to help identify them. And then the actual candlestick, if it's green or red, is kind of outlined on the outside, right? So in this case, I got a 3 candle that was green to the upside. Then we got a 2 directional up that was red because it closed inside the previous, indicating that strong reversal. Then watching those lows would have been that nice break, catching a pretty strong trade to the downside. Again, just for me, taking trades level to level, but this one gave a little bit extra on the side as well, right? So really good trade there. Another example here of a 2-1-2 reversal, so a inside candle reversal here, where we had price put a directional move to the upside, right? Breaking the previous candle high, but then ending up, bulls weren't strong enough, pushing us back into the previous candle's range, and then watching this low for a break here, right? Then we got a inside one, so we didn't get that confirmation yet, but still giving us some good signal there. And then once we got that break, that's where I took my short on this candle, capturing that move to the downside. It was a pretty quick one here, and then just getting extra confirmation on the 30-minute, breaking its lower two, giving also a 2-2 reversal, and then the hourly also putting in a 3-2-2 reversal as well. So just working with the multiple time frames, taking my entry based off the 15, the 5, but then looking at the 30-minute and hourly, saying, okay, that trend is still strong, that we're actually getting reversals on these longer time frames, then I can hold my trade for a bit longer, right? Another example here, this is with gold. So this is another 3-1-2 reversal, so inside candle. So I actually took this one based off of the 5-minute here, right? So on the 5-minute, we got a outside bar right at a demand zone. Then we got an inside candle right at kind of VWAP. So this was a perfect signal because we got multiple confirmations. And then as soon as we broke this high, that's where I took my long trade on this 3-minute entry. You can see that momentum was bullish. We were getting nice nice reversal trade right off a demand zone. So this was a pretty confident trade here. So taking my entry based off the 5, seeing it continue to push the upside, we got this massive 3 on the 15, and then I was just watching the break for this high to then give me that continuation to then target our upper resistance area. So again, taking my entries based off the 5 on 3, and then looking at the longer time frames for that continuity to see that there is strong move in that direction, right? This is another trade example here on gold. So this was me taking the trade on a 3-2 reversal here. So we got a 3 outside candle forming. We broke that low. That was the entry for the short. Caught it on the trade. Nice downwards moving momentum. Strong continuation on the 15-minute as well. Also giving confirmation, breaking that too. So leading to a very strong conviction move. Multiple time frames confirming the trade. Catching a nice short trade there as well, right? So that's pretty much, oh, how many examples did I have? Okay. Final example here as well. Let me just go back to it. Okay, so this is a oh, what happened to my screen? Okay, sorry about that. All right. So, yep. So then this would be, it's another example of a inside candle reversal. So this was also on the 5-minute here, where there was a strong directional move to the downside, right? Breaking this previous candle's lows, but then sellers were unable to sustain, formed an inside candle, very indecisive, closing inside the previous candle's range, and then just watching the highs. This also happened to be VWAP, looking for that break to the upside. That was my long entry, stops underneath the one candle here, and then just looking for expansion to the upside. And this signal was strong because at the same time on the 50-minute, it was also giving us a one candle here inside this consolidation while this was forming, and then just give me extra confirmation that, okay, we got a strong move to the upside. And then once this broke on the 15, I'm like, okay, strong continuation move in that direction, looking to target these previous swing highs, right? So that is pretty much how I use the strat combo, guys. Again, a very simple strategy. If you can identify, what the candlesticks are printing, and then just simply looking for those patterns, then that could really, improve your trading here. So I will, again, the session is recorded. I will post it in the group later today. So let me just end the recording there. So again, thank you guys so much for joining. I hope you guys found, this informative. Again, a very simple strategy to use, but it can really improve your trading greatly, right?